metric number 281745. So first of all is the overview of the banking industry in Malaysia, and I will start with HSBC Bank first. The official name of HSBC in Malaysia is HSBC Bank Malaysia Berhad, and it was inspired by the Hong Kong and Shanghai Banking Corporation Limited. HSBC established its first bank in Penang, Malaysia in 1884.
Assalamualaikum, my name is NURUL binti AZHAR. My metric number is 264833. Next, I'll present about overview of banking industry in Malaysia for public bank. Public Bank Berhad is a Malaysian bank that offers financial services across Asia. Malayan Banking's then General Manager Teh Hong Piao established the bank in 1966. The bank was listed on Malaysian Stock Exchange in 1967. In terms of shareholder money, Public Bank is Malaysia's largest bank, second in terms of market capitalization, which is behind Maybank, and third in terms of total asset, which is behind Maybank and CIMB Bank.
So good morning, doctor and my friends. My name is LING and my metric number is 281725. So today I'm going to present about the background of the Hong Leong Bank. So the background of the Hong Leong Bank, or we call it the HLB in a short form, is a regional bank that provide financial services through the countries which are Malaysia, Singapore, Hong Kong, Vietnam, Cambodia, and China, since it was founded in 1905. The headquarters of the HLB is located at Kuala Lumpur, and since 1968, HLB Berhad has been a part of the Hong Leong Group.
I'm Ang Sing Hui. My metric number is 279466. Bank Simbang Nasional (BSN) is a government-owned bank in Malaysia that was founded in 1974. And BSN provides financial service through its branches and BSN's banking agents, EBBSN. As a result, all customers in Malaysia will receive excellent service from BSN's branch of EBBSN, thus enhancing Malaysian quality of life. BSN's branch and affiliate in the wealth management, insurance, takaful industry, including Permodalan BSN Berhad, Prudential BSN Takaful Berhad, Gibraltar BSN Life Berhad.
My name is FREJA. My matrix number is 702144, and now I will explain about the overview of the banking industry in Malaysia for the CIMB Group. So CIMB stands for Commerce International Merchant Banker. CIMB Bank used to call as the Pertanian Baring Sanwa Multinational Bank in 1974, and in 1986 there is a bit of changes into CIMB Bank after the acquisition by the Bank of Commerce. And nowadays CIMB is the second largest financial services company in Malaysia, and as we know, CIMB has around 2,000 employees in around 12 countries with a market investment of 33 billion ringgit.
Next, I'll present about problem statement. Liquidity of risk is a major problem of 5 of the choose from banking industry in Malaysia. These risks have a negative impact on both of the banking sector earnings and resources. It ensuring the availability of adequate funds to meet the potential demands of supply and borrowers at appropriate cost become a top priority of bank management. Next, research question. First, to investigate the relationship between liquidity risk to its internal factor in Malaysia's banking industry. Second, to investigate the relationship between liquidity risk to external factors in Malaysia's banking industry. Third, to investigate the relationship between liquidity risk to an internal factor and external factor in Malaysia's banking industry. Next, research question. First, is there any relationship between liquidity risk to internal factors in 5 banking industry? Second, is there any relationship between liquidity risk to external factors in 5 banking industry? Third, is there any relationship between liquidity risk to internal and external factors in 5 banking industries. Next, for literature review, first, liquidity risk. According to Oxford Dictionary 7th edition, liquidity is the state of having valuable item that can be easily exchanged for cash. The formula of the current ratio is current asset divided current liabilities. The higher the ratio is more likely the company is to pay off its short-term debt without difficulties. Second, corporate governance index. CG index can be measured by reviewing on the 5 concepts of corporate governance, which is transparency, fairness, independence, accountability, and ethics. Each concept contains 2 to 3 points that influence whether or not it is fulfilled. With a total 13 points, each point earned 1 marks. Lastly, performance risk. A company's performance is an essential part. ROA and ROE are used to evaluate the company's performance. The ROA is an indicator of profit per ringgit of asset. The ROE is a measure of how the capital of the shareholder was spent during a year. The formula to calculate ROA is net income divide total asset, while the formula to calculate ROE is net income divide equity.
Next is the methodology that can be separated into 2 parts, sampling technique and analysis. So first of all is the sampling technique. The Malaysian banking industry is the target population of this study, and 5 banks are chosen as sample to conduct this study. That was HSBC Bank Malaysia Berhad, Public Bank Berhad, Hong Leong Bank Berhad, Bank Simpanan Nasional, and CIMB Bank. In addition, there are only 5 years of the annual report from 2015 to 2019 were used. The second part is the analysis. The effect of internal factors and external factors on Malaysian bank liquidity risk was determined using the 3 models. Model 1, pool models of internal factors to the bank liquidity risk. Model 2, pool model of external factors to the bank liquidity risk. And Model 3, pool model of internal and external factors to the bank's liquidity risk.
First, they are showing the descriptive statistic of internal and external factors. The table shows the mean and standard deviation of current ratio, RE, RA, no performing loan to loan ratio, debt to income, operating ratio, operating margin, CG index, inflation rate, interest rate, exchange rate, and unemployment. The RE shows that the mean is 0.0297 and the standard deviation is 0.023, while the mean of RE is 0.4016 and the standard deviation is 0.2982. Next, the correlation analysis. The Pearson correlation shows that the RE has a highest correlation with the current ratio, which is 0.243. Besides that, there are 3 variables showing the positive value, which is RE, operating ratio, exchange rate. The p-value of RE is 0.121, and the operating ratio and exchange rates are showing the result that 0.036 and 0.045 respectively. Furthermore, there are 8 independent variables have the negative value, which is RA, no performing loan to loan, debt to income, operating margin, CG index, inflation rate, interest rate, and unemployment. From the table, the no performing loan to loan, debt to income shows that the significant value is less than 0.05, which is 0.029 and 0.045 respectively.
Here is the table for the model summary of the internal factors that indicates the company performance for the 5 years. The R value of the model shows the number 0.711. It also shows that the R square value is 0.505. This indicating that is about 50.5% of the change in current ratio in the bank industry, which is explained by the debt to income, CG index, ROA, non-performing loan to loan ratio, ROA, operational margin, and operational ratio. And then we continue for the ANOVA table. So the ANOVA table is to show an analysis of variance table for the international factors, which are the carbon ratio. And we can see, according to the table, the significance or the p-value of this model is 0.6. This reading for the p-value indicates that if the p-value is less than 0.401, the model fits it significantly. This means that the regression model has a consistent variance, that is, the regression model can significantly predict the outcome variables. And now is for the coefficient table. Based on the table above, we will be analyzing the standard coefficient beta, the t-value, and the p-value. From this model, for the standard coefficient beta, the highest number is 0.733 for the ROA, and the lowest number is for the CG index, that is minus 0.434. This means that ROA has the greatest effect on the company, while CG index has the lowest effect on the company. While for the t-value, as continues that ROA shows the highest number, that is 1.631, but indicates another variables for the t-value. For the lowest one is the operational margin, which is minus 0.8041.
So we're going to talk about the model summary of the external factors based on the liquidity risk. So in this table, it's have the adjusted R square with the negative 0.048, which means that this model, the external factors is not perfectly fit, and the Determinant, although the Determinant is less than 2.5, and its predictor is unemployment rate, interest rate, inflation rate, and the exchange rate, and the dependent variable is the current ratio. For the next slide is for the ANOVA for the external factors. So the dependent variable that we used is the current ratio, and the predictors is the unemployment rate, interest rate, inflation rate, and the exchange rate. So in this table, we have the p-value of 0.586, which means that which is more or less than 0.05, and which means that the bank industry cannot predict the outcomes significantly. So in this slide, we're going to talk about the coefficients of the external factors based on the liquidity risk. So in this table, we can know that the inflation rate, interest rate, and also the exchange rate and the unemployment rate are negatively correlated to the liquidity risk, which is the current ratio. This is because the beta of these factors are negative value. Inflation rate have a negative value 0.174, interest rate 0.359, exchange rate 0.077, and also the unemployment rate is negative 0.084. So this means that while this external factors is decreasing, at the same time the current ratio of the bank industry is increasing. So although the negative correlation is occur in the table, the correlation is not very clear. This is because the significance value, which means the p-values of these factors, is more than 0.05. So for the inflation rate, we have 0.511, interest rate 0.134, exchange rate we have 0.875, and unemployment rate we have 0.868, which all of these of the external factors is more than 0.05.
Next, model summary. They are showing a R value is 0.816 while the R square is 0.366, which is indicated the independent variables is around 66.6% of variation in current ratio. The standard error of the estimate is very small, and the turbine water value in the model description is less than 2, which is 1.896, indicating there is a positive autocorrelation. Next, ANOVA. Based on the table, the model shows that the significant value of the p-value result is 0.072. For coefficients, the RA and RE shows that the significant level is lower than 0.05, which is 0.035 and 0.016 respectively, while the CG index p-value is 0.085, which is less than 0.10. From that, it shows that RA and RE small profitability will give a huge effect to the liquidity rates, while the CG index will give a weak and significant effect to the current ratio.
Here we come to the last part for this presentation, discussions and conclusions. First and foremost is the discussions of the result. From the previous part, we can conclude that only internal factors have influenced the current ratio of the Malaysia banking industry. ROA and ROE that have a p-value that is less than 0.05 means that it has a moderate and significant effect towards the liquidity risk. And the CG index with a p-value that is less than 0.1 has a weak and significant effect towards the liquidity risk. While external factors does not have significant relationship with liquidity risk on Malaysia banking industry. Next is the limitation. The report is only choosing 5 samples of banks to generalize to the whole banking industry in Malaysia, and it was only covered the 5 years annual report from 2015 to 2019. Last but not least is the recommendation to the banking industry. The result of this research shows that ROA and ROE, or can be said that the performance of the company have influence on the liquidity risk significantly. Thus, to increase or maintain the current ratio, performance of company needs to be improved. So here are few ways to improve the company's ROA. First is increasing its net income. Due to the banking industry does not have goods to sell, therefore, they can increase their net income by increasing other revenues such as the interest and trading income. The second way is to reduce the total asset. The banks could reduce its total asset to boost up its ROA. And lastly is increasing the efficiency of its current asset and fixed asset. Current assets such as the holding cash could be used to do some short-term investments such as the marketable securities instead of just holding it. The fixed assets such as the bank's buildings also should fully utilized to gain profit. And that's all from Group 4. Thank you.